Tom, welcome to the Building and Growing podcast. We're delighted to have you here today.
Thanks for having me on.
You're most welcome. Tom is a principal at Fuel Ventures. And are you able to start off just by telling us a bit about yourself and maybe what happened pre-Fuel, which is, certainly when we met each other?
Yeah, absolutely. I mean, we've obviously known each other for a few years from back in the pensions days where we both started. So I started off in the banking world doing derivative structuring for pension funds, which, as you can probably imagine from the title, isn't the most interesting thing in the world.
Yes.
And probably not the fastest moving industry in the world. So having got into the nitty gritty of that, it gave me and one of my colleagues an idea. And we're talking kind of 6-7 years ago now at the tail end of that.
Yes.
And cost transparency was being talked about a lot in that industry. Performance analytics was very advanced. Risk analytics was pretty advanced. And people started to talk about cost and how we bring that to the fore. So we left that and we set up a SaaS business to try and help pension funds along that journey. So we built a UX that basically gave them all this data in a pretty easy to understand format, mixed it with some of that performance and risk data, and then benchmarked it against other funds so they could see effectively where they sat in a metric we called value for money, which is technically impossible to really measure, but we were trying to get as close to it as possible.
A fantastic B2B business, which I think is our favorite.
Fantastic, love B2B, but made all the typical mistakes that a first-time founder would make. I think there was one big thing that we didn't see, which was that we were effectively bringing data to the fore that certain other parties probably should have known in advance.
Okay.
And so we were in that interesting space where people would have to admit that they hadn't seen something for quite a long time that had a pretty outsized effect if they were to buy this software.
Okay.
So that was probably one of the things. But we received backing from a Swedish regtech company. And we got it off the ground. We got a few customers, and then NASDAQ actually came along and bought out that company that had backed us.
Fantastic.
And we thought at the time, we don't see venture scale in this. So we got swept up in that acquisition for what I always describe laughably as a non-champagne exit, one where you go straight back to work.
No.
So then I dived straight back into the SaaS world, was the first sales hire at a company called Finborn. I kind of went in to try and lead that under a sales-focused co-founder. And this was the complete other end of enterprise SaaS. So what we were doing before was the kind of 30, 40, 50K ACV.
Yes.
This was the kind of million plus.
Fantastic.
So a great experience to do that for a couple of years. The company was very, very successful in those 2 years that I was there. Not necessarily anything or all to do with me. There was just a fantastic team in place, and we were solving a real problem in data infrastructure.
Excellent.
So spent a couple of years there. Really enjoyed it. Ended up a short foray into something in the B2C side of fintech. But as you've already said, B2B is the answer. That's where we kind of really like to sit and enjoy. So
that's it.
Jumped across to Fuel Ventures 2.5 years ago to help the GP there, Mark, set up the pre-seed fund. So it already had a pretty well-established seed fund and a follow-on fund, and this was coming in to go one step earlier.
Yes.
And build a structure where we could invest a relatively small amount in a lot of up-and-coming founders who are building cool things.
Fantastic. Look, very, very interesting story. And one thing that, I forgot to mention earlier on in the podcast is the fact that, you didn't have a moustache back in the pension days, but I think you're doing Movember now.
Yeah, exactly. Third year in a row now.
Fantastic.
Doing my little bit for kind of charitable efforts every year. So they're raising awareness for prostate cancer, testicular cancer, and men's suicide rates. And I think it's a it's a great cause, a relatively easy thing to do to make yourself look stupid for a month, and raise some money for the cause. So yeah, definitely something I'll continue to do.
Yeah, and look, we'll be sure to put the link in the comments, even if we're slightly past November. I'm sure that they'll still continue to take donations.
Absolutely.
Back to Fuel. So after a super interesting and varied career, B2B SaaS in particular, you've joined Fuel to focus on the pre-seed side of things. Fuel is very well known, I think, in my network for the wonderful memes that it produces. That's something we could dive into for a long time. But another thing that it sort of stands out for is the fact that it offers some SEIS and EIS funds, which for those who know what they are, they love to invest in. For those who don't know what they stand for, they probably are too afraid to ask. So should we start there?
Yeah, it's one of those things that is kind of like shrouded in mystery to anyone outside of it. And then as soon as you get into it, there is, like, you can go to the ends of the earth into the detail. There's a lot of nuances, but actually on the surface, there's a relatively simple concept. So at its core, it's a tax scheme to incentivize people to invest in really early stage companies in the UK, or that have at least some relation to the UK. The key thing being people rather than necessarily entities. It has to be done on a personal level.
Yes.
I think the easiest way to go through it is to split it on the company side and the investor side, because there's a lot of numbers thrown around about limits and all the rest of it, and actually a lot of them get confused because there's normally a limit for the company and a limit for the investor, the person, each time.
Okay.
So this is actually already also about to change on the 6th of April, I think it is, when the new tax year comes in. So
we'll have to re-record then.
Yeah, exactly. I'll probably talk about what it's going to be, because then it's obviously a bit more useful for the future. But effectively, if a company, there's a lot more to it than this, but at a basic level, if a company has less than 350,000 in assets, has been trading for less than 3 years, this is getting at the fact that it's a very early company, then they can raise up to 250,000 of SEIS eligible funding. Mm-hmm. On the investor side, it's looking at someone who has income that they want to offset effectively. Mm-hmm. So as an investor who invests either via a fund or directly into a company, they get 50% income tax relief on the amount they invest, and some other benefits as well.
Yes.
But yeah, it's effectively trying to convince people to get into really early stage companies, because like the UK investment market, especially early stage VC, is good, but we're still nowhere near where we are in the US. They have such a great angel scene because they built so many big companies. So they've got a lot of people who have come out of those and then want to back the next generation.
Yeah.
And we're getting there in Europe, and particularly in the UK, but this is just that helping hand to push people to get money into those early stage companies and drive innovation in the UK.
Okay, fantastic. So the pre-seed fund that you mentioned that you were working on, is that SEIS or EIS?
That's SEIS. So all the numbers I was just talking about was SEIS. Okay. And then EIS is the same concept, but larger limits, larger investment amounts, and slightly lower income tax relief to compensate for the slightly later stage of the companies, and therefore slightly lower risk.
Okay, fantastic. Thanks so much for explaining that. Certainly one for me to look back on as well in the future.
Absolutely.
Excellent. So in terms of your day-to-day job, you're meeting with a lot of founders. How should founders approach VCs when they're fundraising?
I think the first thing is that there's a lot of VCs out there. They're all very, very different.
Yes.
So on two separate levels, know who you're going after. Mm-hmm. There are so many who won't be appropriate for what you're trying to build.
Yes.
So let's take going back to B2B SaaS. If you're looking to build something in the B2B SaaS space, make sure you're approaching investors who are telling you in their website or whatever else marketing they're doing that they invest in B2B SaaS. There's absolutely no point approaching a consumer investor with a B2B SaaS idea.
Indeed.
Because it's taking up your time and you're not going to get any benefit out of it.
Mm-hmm.
So surface level, make sure that the fund that you're targeting is investing in what you're building. One step deeper, look at the actual people within that fund. So there are going to be partners in different funds, some who focus on B2B SaaS and some maybe focus on consumer if it's a generalist fund. So you want to be targeting the right person within that fund. That's super important. And then the other thing is, once you've got to that point, you want to look at just who that VC is. What can they offer you? What is it you want from them? And that will kind of help you define who's your kind of, this is my top tier, next tier, and so on. So that's how to look at it in terms of like who to target, how to do it. Intros are pretty essential.
Mm-hmm.
So I'd say that becomes more and more true as you get further down the scale from pre-seed, seed, A, B, C, and so on.
Yes.
Because at the later stages, it all happens through network. At pre-seed, obviously, there are lots of great founders out there with great ideas that don't necessarily have an existing VC network. So if you can't get away in through an intro, that doesn't mean you shouldn't reach out. Because if they are interested, they will respond.
Yeah.
And in that, like, have your one-liner and your intro paragraph prepped, because if you're going to ask someone for an intro, they're not going to want to design that for you because you know the company better than anyone else.
Indeed.
So that's key. I think pitch decks are very easy to get right.
Yes.
There's so much advice out there. I won't necessarily dive into it right this second. But that's one thing that you can completely control and you can get right.
Yes.
Don't ask for NDAs, especially at the really early stage. Pre-seed VCs are looking at hundreds and hundreds of these a month, and they can't sign an NDA because it just restricts them too much. They don't have the time to get legal involved and start looking at what I'm actually constrained from doing.
Yes.
If you're talking about later in stages and later in the process, absolutely. Like if you're talking to a growth investor and you're past that first conversation and you want to start sharing data rooms and details, like obviously, but I think we'll probably focus more at the really early stage in everything I say here, because they're probably those who are going to be more interested in learning and getting into it.
Indeed.
Those that are already a little bit further down the road obviously already have VCs in their corner and someone who can advise and back them on that stuff.
Yeah, I agree with that.
Preparation, like adding on to the pitch deck piece, there's loads of stuff that you can get right before you even start having the conversations, before you even reach out.
Yes.
So practice the pitch. It's going to be the first thing that they hear or see when you're in the room with them. So like obviously don't come across robotic, but just make sure you know exactly what you want to say and how you want to say it.
Yes.
Make sure all the follow-up is ready. So have you already built the model? Have you got the FAQs in place? All of that is essential, because once a VC is interested in something, they want to move at pace, and you probably want to move even quicker than they do, because raising money as a founder is not the fun part.
Yes.
Like building and selling is the fun part. Raising is just something you have to do to grow quicker.
Indeed.
So if everything is ready, you'll be able to move super fast in that process.
Okay.
And I think the last thing is, I mean, there's obviously 1,000 things more we could talk about, but be passionate. This is something that you are doing because you think you can change a little part of the world by building this, and you should be completely obsessed with that idea. So show that obsession to the VCs you're talking to, because they will feed off that and they'll buy into that.
Yes. Very, very true words. And I think, the final one shows, because the VCs ultimately at pre-seed stage, you're investing in a founder, right?
Absolutely, yeah.
And so that's so important for that passion to sort of, perspirate from them. For lack of a better word.
Founders are the most important element the whole way through the journey, but they have an outsized impact at the earlier you go, because the company is fewer people the earlier you go.
Yes.
So they are pretty much doing everything at the pre-seed stage. You might have a couple of early employees, but you're going to be pretty much doing everything.
Yeah.
So they are like I always talk about, when I talk about process, I say, we look at these things that when we're kind of first looking at something, there's a few things that we look at. at a high level.
Yes.
And then the founder is almost everything. Like everything they say and do in the meeting, you're looking at, you're analyzing, but they just have such a great, like an outsized effect on the outcome of the company.
Indeed. I want to take a quick step back in terms of, the founders approaching VCs, because you made a really good point about looking at who works within a VC and what their background is.
Mm-hmm.
And the reason that I want to discuss that is because, Fuel, for example, really prides itself on hiring ex-founders and operators.
Mm-hmm.
So can you talk about the benefits of, say, having investors who are from that particular profile as opposed to, say, an analyst type profile?
Yeah, there's no right or wrong here. There's a little bit to do with stage. So operators at pre-seed and seed, I think are super, super useful, because you're basically, that's the point where you're trying to go from 0 to 1. You're trying to get off the ground. So having someone in your corner who's done some element of that or multiple elements of that before, if you're talking about the kind of people across the fund as a whole, that's a huge value add. But that's not to say that if you come from, because the other two kind of classic backgrounds are consultants and people from IB.
Yes.
And as you move through the stages, you tend to see a lot of consultants at the kind of later early stage, so Series A, because you want people who are able to do a lot of that analysis work, and that kind of that piece of being an operator at a really, really early stage. They've already got through that piece.
Yes.
So then you maybe want operators who have scaled something and got from that kind of one to that next stage. And then when you get to the growth stage, the IB background is super useful because you're dealing with extremely complex financials at that point, and you're ultimately looking to help take that company to an exit.
Yes.
So someone who's worked in M&A or taken companies public suddenly becomes an incredibly valuable asset to have on your board or on your corner,
Yes.
because they've spent a lot of time doing that. So that's why you generally find slightly different backgrounds at different stages. But ideally, you want to have a bit of everything as you go through the journey. Whether you collect a bit of everything at each stage or whether you collect one at each stage, it's certainly useful to have that on the board.
Fantastic. Thanks so much for taking us through, the profiles per stage. Super interesting.
I mean, don't take that as read. Everyone does it differently, but that was just trying to kind of summarize in a simple way. Yeah,
it was very simple, very clear. And I guess, people can read into it in one way or another, but certainly, I guess for me, something that it's simple, it's to the point, and it makes sense. So thank you so much for providing that. Earlier on, you mentioned that you might dive a little bit more into tips around preparing the pitch deck. Should we dive into that?
Yeah, happy to.
Yeah.
So I think I'll come to some specifics in a second, but there's one overriding theme, and I think this is something that's super important that I think a lot of people don't think about, is that when you're in the founder journey, it's constant, it's crazy, there's always 10,000 things to do, and it's super busy.
Yes.
And I think founders need to appreciate actually that VCs are often in a very similar position. Like if you just take it at the very, very highest level, VCs are building a network that allows them to find the best deals. That's a huge time investment. They are fundraising, because if you don't fundraise, you don't have capital to deploy. So that's constantly meeting with your LPs. You're doing the investment work. And if you really want to get to know founders in a company in the space, each deal requires a huge time commitment. And then ultimately, once you've made those investment decisions, you're advising those companies. Yeah. And so when you're looking at that across multiple companies, sometimes multiple funds, there's a lot going on. So the point I'm trying to make here is your deck shouldn't be as simple and as easy to read as possible, because someone is going to look at it and they're going to make a relatively quick decision, because they can't spend half an hour going through the deck and looking at every single word, letter, nuance.
Yes.
So with that kind of overriding theme in mind, there's probably some key stuff to go through. One is understand the purpose of a deck. It goes along with this theme, which is it's just trying to get you in the room.
Yes.
It doesn't have to sell the whole proposition. So people worry about like, what shall I, if I take this out, they're not going to understand it.
Mm-hmm.
It has to be absolutely essential to the understanding to get the concept of what your business does to stay in the deck. Everything else comes out.
Yes.
Because then someone can go through and pick out the salient, super key points,
Mm-hmm.
and they'll make a decision as to, is this someone I want to follow up with and speak to, or is this not? And the more you put in there, the more likely that is to be something that they can't cut through.
Yeah.
And so they don't see the really key point, and therefore they don't reach out.
Okay.
So actually, people often think the more I put in there, the more they'll see. But that's actually, it's the opposite to that. The less you put in there, the more key stuff that you highlight, the more likely they are to see it.
So cut the fat.
Cut the fat, absolutely.
Yeah.
So that's the purpose point. Structure.
Mm.
Structure is super important. And I think there are different, VCs like to see things done in different ways. So you won't hear every VC say, this is the way you structure a pitch deck.
Yes.
As in, there's a way that I like to see it because I think it makes sense for me, and I'll happily talk about that. But I think broadly this would be a good way at looking at it. So start off with the vision. So like broad brush, where are you trying to get to? Because I want the context of your dream. So then I'll put everything in the context of what that is. So where are you trying to get to? What are you trying to achieve? Start with that, and then talk about the problem and your solution. Mm-hmm. So what are the specific here and now problems that I'm trying to solve? Because I understand this domain and I know that these are problems. And obviously talk about the product or API or whatever it is that you're building as the solution to that. And that is effectively the context piece. Then you're going to go for the selling points. So this is the bit that's really, really, like, if they like that concept, they like that idea, and they think, yeah, this is a market I understand. This is a problem that I think exists, and this is a solution I think would work with that.
Yes.
Then you've just got to punch all the selling points home. So the team, we talked about the team being super important. That's the most important thing. So that has to go next, in my opinion.
Yeah.
Talk about what you've done, why you're right for this particular company. So founder market fit is super important. Mm-hmm. Talk about the traction. VCs love nothing more than to see that someone's bought what you're selling, because if someone is willing to pay for it, it means you're absolutely doing something right.
Yeah.
Talk about the market. If the market, like VCs, by definition, if you look at VC mathematics, everything they invest in has to be able to return the fund. And hopefully several times over. Yes. And that can only be done in a very, very large market. So you're generally looking at markets where you can sustain multiple unicorns. Is again a very simple way of looking at that. So talk about how big the space is, but really key is, like, don't overstate it. Be sensible about what that analysis is, because like we often see people, let's say they're building something within the HR tech space, and they'll say, my TAM, like the total market I can go after, is HR tech, and it's X 100 billion. Yeah. And in reality, you're not going to be the entirety of HR tech ever. Yeah. So that isn't your TAM. So be sensible about what that huge market is. And then also have a good justification for going from like the TAM, SAM, SOM. So what the total market is down to what SOM is obtainable market, what you could actually get to with your core product. Yeah. Have a reason for why you're going down to those specific areas, not just my SAM is 10% of my TAM and my SOM is 1% of that number, which is what I see often. There's no justification for that. Yeah. They're just numbers. So sensible market analysis, but it's a key selling point. And then talk about why now. So lots of VCs talk about trends and super cycles, and they're doing constant analysis as to what they think the next big thing is. Where are the gaps? Yes. So VCs will be super interested in something that's in a gap that they've already seen somewhere. So the why now piece, have you got a tailwind basically? Or have you got a headwind? Because some markets are shrinking and some markets are growing. So that's a key point. They're the really key selling points. And then effectively the rest of it is just wrapping up the detail. Yeah. So the go-to-market, how are you going to do this? the business model. How are you going to monetize this idea? What am I asking for, and what am I going to use that money for?
Yes.
Which is all key stuff. So structure's key. The other four are pretty easy to talk about. Length is key. I talked about 1, 2, 3, 7, 10, 11 things there. So
Yes.
if the deck is more than 12 or 13 slides, then you're not focusing on those salient points again. Length, structure length, design and comms.
Mm-hmm.
So it needs to look good. Even if you're building something super nerdy and deep techy, if the deck doesn't look interesting, then VCs will assume you don't care enough.
Yes.
It's coming back to that passion point. If you really cared about that business, you would present it in a way that you felt proud of showing it off in.
Yes.
And then very much on the same wavelength, how you get those points across. Like I've just kind of breached my own rule by talking about TAM, SAM, and SOM, but don't use jargon. The VC is highly unlikely to come from your very specific market.
Yes.
So if you need to talk about something technical, make sure you explain it.
Fantastic.
And yeah, don't clutter the slides. Just keep it simple.
And you mentioned metrics and traction earlier on. We've just come out of a bull market where growth was sort of favored as the king or the queen. In terms of traction now in more of a bear market, any key things that you look for in the deck?
It's a difficult one to answer from a pre-seed perspective, because we're often looking at businesses where there aren't really real metrics. There's very, very early stuff, but you have to take everything with a pinch of salt.
Yes.
Because it's going to change many times over even in the next 12 months.
Mm-hmm.
So I would say that there's probably a more interesting point to be made as you're moving up the market right now, which was the market we were in a year ago was growth at any cost.
Yes.
Whereas now we're in a market of growth at sensible cost.
Mm-hmm.
So you need to show that you're not burning too much cash, basically.
Yeah.
You're still growing at a rate that's going to interest VCs and that's going to justify a higher valuation at the next round.
Mm-hmm.
But you're not doing that at a kind of ridiculous cash expense.
Yeah.
So I'd say that's probably the key one to focus on at any stage. But I think that's very, very important as you're going up the curve at the moment.
Yeah. So I think focus on retention, so that you're not just churning customers and having to buy more.
Yeah, I mean, retention is cheaper revenue than growth is, because you already know them.
Yes.
They've already downloaded your app or they're already using your service. So retaining those users is always going to be a more efficient way of keeping revenue, or obviously land and expand in the enterprise space, growing your revenue with people you're already connected to. Yes. Every time you're reaching out to someone completely new, be it social media marketing costs in a consumer space or a salesperson's time in the enterprise space, it's very costly to actually get in front of those people and convert them.
Yes, indeed. Tom, we've spoken a lot about the importance of founders. You've talked about, what they can do with the pitch deck in order to make that compelling in the story. But when it comes to the founders themselves, what sort of qualities or skills do you look for in them?
Yeah, it probably helps for me to very briefly touch on like how we would look at that pitch deck. So
okay,
you're looking at that first piece, saying, right, let me get the context. It probably makes sense to just talk about it in that order.
Yeah.
You're looking at that to say, do I agree with the vision? Do I like the problem set and the solution?
Mm-hmm.
Then a kind of looking at the team slide, do I think this is the right team to do it? Do I think the market is big enough? Do I think the analysis is sensible?
Yeah.
Do I think that there's a tailwind and this is in one of those really fast growing markets? So once you've ticked off those things, you're then going to actually get into a conversation with the founders. Mm-hmm. And you're going to then look at pretty much everything they do, because almost everything is a function of their decisions. Mm-hmm. So you obviously, once you're in a market, you can't necessarily control competition and certain other things, but you're designing the go-to-market, you're designing the business model, you're designing the product. So almost everything is a function of that founding team. You can probably break it down into 3 areas that are super important.
Mm-hmm.
For us, we love domain expertise.
Yes.
So talking about that founder market fit, do they know who the players are, who the competition is, what the pitfalls are? Do they really understand the problem? Then we're looking at skills and experience. So talking about the founding team as a whole, do they have the ability to design something cool, build something cool, and get that to market? And that's 3 very distinct skill sets that you need to have in that founding team. It's very difficult to do as a solo founder.
Yes.
To be all things to all people.
Yeah.
Which is why I talk about co-founding team as a whole. But looking at that mix of skill sets and looking at their experience, it's very well proven that if you built something before, you're very likely to make more of a success of it than someone who's never done it before, because you've made a bunch of mistakes or you've got it right in the past. So you already know what some of those pitfalls are on the growth journey of being a kind of startup, scale-up software company.
Yes.
So skills and experience, domain expertise, and then demeanor.
Yes.
How do you come across? Going back to the point I made at the start about being passionate, like VCs want to see that you love the idea and that you really want to build something in this space and you really want to solve a customer problem.
Yes.
If you don't show that you have that confidence and that belief and that passion, their interest won't be the same.
Indeed. Tom, I'm conscious that we're nearly out of our slot. We don't want to get kicked out of the studio, but
Sure.
In terms of finishing off the podcast, would you be open to give any tips to people sort of considering a move into VC?
Yeah, absolutely. There's probably a good few hundred blogs that people have written about this, and people have very different advice all over the place, but I'll probably pick out a few things that I think are important. So we talked a lot about different skill sets for different stages and different types of VCs. So it's very much the same point as for a founder. Like, look at the VCs and look at what type of VC you want to go to. Going to a pre-seed VC is very different from going to a growth VC, and what the skill set you need is very, very different. So you need to kind of set yourself up by going into a startup, going into a consulting, going into an IB firm. It's quite difficult to go straight into VC out of university.
Yeah.
So taking one of those routes is a good way to get some experience that you can then take into that world.
Indeed.
So yeah, looking at the type of VC and therefore the type of role that you want to be in to try and find that route in.
Yes.
And then also the tone of the VC. Are they a corporate VC, or are they a kind of more relaxed tone? And you can tell from, again, websites, speaking to people.
Memes, perhaps.
Sorry, memes perhaps. Yeah, exactly. I think we know which end Fuel sits on that scale. Read and listen. So read blogs, listen to podcasts, however it is that you like to engage with content. The key point here is that to be a VC, you need to be very curious, is the word that gets thrown around a lot. You need to be obsessed with how things work and how founders want to engage with and build something.
Yes.
And if you don't have the drive to listen to podcasts and read up on the industry, it's probably not the industry for you, because you need to have that obsession and that passion with everything that's going on in the software, hardware, wherever it is that space that you want to get into. I think you have to be someone that has an opinion. VCs are relatively small companies in the majority of cases. So when you go into one of these firms, you'll probably have quite a big voice, especially if you're coming from a corporate space. And you've been hired because people want to know what you think. So don't be scared of saying exactly what you think, because if you think something entirely different to the VC you're talking to in an interview, for instance, that's probably not the right fit for you.
Okay.
So it's not necessarily a bad thing. By speaking your mind and having an opinion, you'll find the right fit over time. Networking is key. If you and deal flow comes very, very closely linked to that. So if you want to get into it, like, start talking to people in it a couple of years before, get involved, but don't just reach out and say, can you help? Like, be helpful.
Yeah.
Say, I have a particular expertise in this space, and I would love to, if you have something you're looking at in this space, I would love to help you go into the detail on it. If you need someone who's an expert in this area, let me help you with that. Because you start to offer value, then you become part of that network and you'll organically get introduced.
Indeed.
And again, the lifeblood of VCs, apart from the capital side, is the deal flow. So if you see something cool and you're starting to build that relationship with a few people, like, send stuff that you think is really interesting to them and say, hey, I saw this. And I think, like, based on our last conversation, I think it's something you'd be interested in.
Yeah.
And if you start building that network and sending cool deals to people, you won't need to apply for the jobs. They will come looking for you.
Indeed.
And I think this last point is absolutely not specific to VC, but I think the world is becoming more and more about the person, the human, and not necessarily just being like a corporate voice. So when you're talking to people, when you're like writing an application, a CV or whatever, just be a human, be a person, because it's very easy to get worried and think, right, I need to be kind of super corporate and super robotic about it. It's very easy to fall into that trap. But actually, just write things as if you're saying them. Obviously, don't be too far the other way.
Yeah.
But people want to know who you are. Who are they going to sit next to for the next few years, and who are they going to be working with? So going back to the opinion point, what do you think?
Yes.
Who are you?
Indeed. I mean, it's not like, sort of 12 years ago, even 10 years ago, when you're applying for a job and you write, a 4 or 5 paragraph sort of cover letter and you sign it at the
same
bottom.
Structure every time.
That's it. I think in France, you actually have to write it with a pen for some prestigious firms. Otherwise, they won't even consider you. So, yeah, things have changed.
Yeah, I don't think. I mean, some VCs are still quite corporate, but I think the majority are looking for people.
Yes, yeah, indeed. Look, Tom, we've covered a great deal today. Thank you so much for joining us and for sharing all of your insights. Before we turn off the cameras, any final tips or points you want to make?
What shall I reel off? A couple of things. I think we talked a lot about fundraising.
Yeah.
So very quickly, when you're ideating, find the right people, co-founders, hire A-star players, get A-star players on board, because again, founders, the team are everything.
Yes.
And focus on the customers, because if you're not really solving a problem for someone, you're always going to have the problem of facing being something that's nice to have rather than something they have to have, because you've really solved a problem. And then as soon as you get onto the building phase, like, ship fast.
Yes.
Don't ship too early, but ship fast. Start selling to people quickly, because that's when you know whether someone's actually going to pay for it or not. And if they're not going to pay for it, then you instantly know that it's not the right thing. So you go back to the same people and say, what do I need to do in order for you to pay for this? So you get to those feedback cycles very quickly. And then one last thing that I think is an easy mistake to make is, once you have raised that money, don't scale too fast. So this is very much a pre-seed thing, but you often haven't found product market fit. The money is to try and find product market fit. Yeah. So stay lean until you find product market fit, and then scale the things that are working. It's very easy to think, right, I've got this money, I said this in my business model, so therefore I need to start spending. It's not necessarily the case. You need to actually find product market fit and then start spending money on that fit. Indeed.
Look, really good points. Really love the one that you mentioned about, finding the problems that you need to solve in order to ensure that translates to stickiness.
Absolutely.
I think my favorite part about the B2B space is the stickiness aspect. You can really solve problems and not have to worry about churn if you do so.
Yeah, retention's very easy if you're solving a massive problem.
Indeed.
Are you making it more efficient, faster, more revenue, less cost? It's like you can stay in somewhere for a very long time with a relatively simple product if you're solving a problem.
That's it. Tom, thank you so much again.
Yeah, thanks for having me. It was really cool.
Excellent, and we'll put your link in the comment section for Movember.
Yeah, I have absolutely no doubt they'll happily accept donations long after November is finished.
Excellent. Thank you so much, mate.
Cool. Cheers, buddy.